Welcome to the June 10th, 2024 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. A huge week of trading, and we're going to cover some of the outcomes, and we'll also cover a global shift. But first, we need to cover the Texas Stock Exchange. Now, this is not just a couple of Kenny Chesney fans who dreamed up a Texas Stock Exchange. This is BlackRock and Ken Griffin's Citadel. They handle huge amounts of volume. BlackRock, the world's largest asset manager. Citadel, an institutional clearing firm and, of course, hedge fund, absolutely raising $120 million, a serious commitment to a stock exchange that'll be based in downtown Dallas. Congratulations, North Texas, cementing North Texas as Y'all Street, a hub for financial centers globally recognized now with the Texas Stock Exchange backed by BlackRock and Citadel. So congratulations, Dallas business leaders, and of course the companies like Schwab, Fidelity, Goldman Sachs that have realized that Texas is a great place to be. The Texas business courts were a big part of this. They were established as an alternative to the Delaware chancellery system that Elon Musk got mad at and moved to Texas as a result as well. So God bless Texas to start. I'm Spencer McGowan, your financial weatherman and President, McGowan Group Wealth Management, a team of 10, the team that cares, based right here at the Crescent in Dallas. We serve affluent families. You can set your time for a brainstorming session with our wealth management team by simply going to networthradio.com. Contact us there. All right, here's what's happened this week. Central banks globally began to cut rates. Now, not the Federal Reserve yet, but Canada first, then the European Central Bank, which is a big deal. Their overnight bank lending rate is now 3 3/4. It was 4, and of course the Fed's way up here at 5 1/4. This puts pressure on the Fed because it does create imbalances around the world, and their departure from following the Fed is a big global shift. It also sets the stage for a potential earlier cut by the Federal Reserve, which could drive the value of equity. The Dow approached 39,000 this week. That's a 4% gain so far this year. But the other blue chip index, the S&P 500, almost a 13% gain for the year. What's the difference? Well, let's cover one of the biggest factors. It is all about AI mania and NVIDIA at this point. So we did a 5-year graph on NVIDIA. Now, they have the leading artificial intelligence chip with the most computing power. Boom, look at this. If you go on a 5-year basis, right, the stock made most of the money here in 2023-24. This is 32 times the original money right now. Is the company worth it? Well, they have a lot to do to justify their current valuation and this $2 trillion run-up. I wanted to cover one other phenomena. You have AI mania. You also have weight loss mania. Since Kim Kardashian decided she wanted a little butt instead of a big butt, and on social media, everybody wanted to lose weight, and they're all going Ozempic, Mounjaro, right, Wegovy, and it's become, there's other health benefits. There was an earth-shattering study that said, hey, if you lose 20 pounds, you're less likely to die of a heart attack. Like, most people could tell them that without a study, but anyway, Novo Nordisk began an advertising campaign. There was also a medical study that showed benefits for kidney dysfunction, if you will. But anyway, that's a 5-fold gain over 5 years. Novo Nordisk is a good example. Uh-oh, what happened here? Roaring Kitty got run over by a truck. And the truck was an actual announcement by the company. So Roaring Kitty started a few years ago, ran the meme stocks, AMC, GameStop, coming out of the pandemic when everybody's going to die, and sold all their stocks. Well, we didn't. If you were a subscriber here on YouTube, McGowan Group, you would have known what we were doing because we talk about the components of the portfolio. This turd is not going in our portfolios, and I'll tell you why. All right, so GameStop had a huge run years ago, and then Roaring Kitty, Keith Gill, got in trouble because he was registered with FINRA, and he had a side job, which was meme posts, and he helped run the stocks, basically taking it to the hedge fund managers that were short questionable companies, GameStop being one of them. So overnight on Thursday, boom, $67. It started the week at 30 and it was 17 when Roaring Kitty roared back onto social media. Now, here's the truck. GameStop had sales fall 29%. I mean, they have the stores, and the only one that goes in them is like teenage, guys that play video games all day, and they buy back stuff. That was a great insight from our intern, Harrison Wagner. They buy stuff back that's not worth anything. So this is probably a very bad business model, evidenced by the fact that they have huge retained losses. The company, valued somewhere at this price around $11 billion. They're going to sell another billion or two in new stock on top of that. And what's their business actually worth? I would say not 11 or 12 billion. I would put the value of the business maximum at maybe 3 billion or 4 billion, but I think that's pushing it because they're losing money. Well, this social media phenomenon, they were going to run these stocks up, so everybody started trading them. And here's a longer term history of GameStop since the beginning of the year. Look at this. You go from 10 bucks to 65, back down below 20, then you go up to 65, then you go back below 40. This is a wild ride. It's still up 65% for the week before their YouTube announcement on Friday, which stopped trading. Well, stop trading is pretty disturbing if you own something, because then you don't know what it's worth or where it's going to open. So don't buy money-losing companies. McGowan Group Wealth Management, a team of 10 constructing portfolios as a fiduciary with deep research from our investment committee. I'm Spencer McGowan. Thanks for tuning in. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.